Welcome to today's video. My name's Michael Neuenschwander with Outlook Wealth Advisors. In a previous video, we talked about the various risks that somebody needs to address as they prepare for and get into retirement. One of those risks had to do with long-term care expenses. So as we talk about today's video, we're going to focus on the 4 ways that you can address the expense of long-term care. But before we do, let's actually talk about what does long-term care actually cost. Now, Genworth does a big study. You can Google it. They update it every year. So it's a Genworth cost of care. And it'll tell you, you can put in zip code of your state and tell you on average, what are the costs of long-term care in your area. But today, if we simply use the average or the national average numbers, to have somebody come give you care in your home, so home health care, is typically between that $3,500 and $5,000 per month, depending on how many hours, how many days they come. If somebody needed assisted living, so that's typically running in that $5,500 to $6,500 per month range. And if somebody needed full nursing care, that's typically in that $8,000 to $9,000 plus per month type of expense. So when we talk about long-term care, it can be a huge burden on a family to the point that it may actually use up almost all of the assets. And unfortunately, if there's a healthy spouse, leave them in a pretty tough financial situation. So when we talk about the importance of having a plan for long-term care, that's what we're dealing with and what we're trying to avoid. So the 4 ways that you can do it. First, you can think of, there's traditional, what we would call long-term care insurance. You get with a company, you apply, they are going to look at your health and see, do they offer it to you? And typically you can determine how much coverage you want to have. So $3,000 a month, $4,000, $5,000. A typical strategy, though, is you are not trying to get the insurance company to pay for 100% of that care, because you'll still typically have Social Security coming in. If you're fortunate enough, you have a pension. So you'll still have some income coming in. What you're trying to do is at least have the insurance company pick up a heavy portion of those expenses so that you or your healthy spouse will still be okay while having the insurance company come in and do some of the heavy lifting. There's also some certain rules, and this applies sort of across the board for long-term care, but you may see many ways to protect yourself are keyed around a 5-year date. And 5-year is the most common because that has to do with the rules for Medicaid, which we're not going to get into in deep detail today, but just think of it as it says, Medicaid can look back 5 years to ask, what did you do with your assets? If you've done some planning or if you have insurance that is paid for 5 years, you can then rightfully go tell Medicaid that you don't have any other assets to go towards long-term care, and ultimately Medicaid will step in and pay. Now, I will caution everyone, Medicaid is typically not anyone's first choice, but if it comes down to spending all your assets and leaving your spouse with next to nothing, well, then Medicaid does become an option, and doing the right kind of planning to make sure that you at least have that option is important. So the first, as we said, is typically just buy traditional long-term care insurance. Now, almost all long-term care is triggered by what they call activities of daily living. So if you can't do 2 out of 6 things, that's the trigger for the insurance company to pay. So that's number 1, just go buy traditional long-term care insurance. Second strategy, which we touched on in another video briefly, is that most life insurance today will pay for long-term care. So if you have a life insurance policy that was going to pay $200,000 or $300,000 upon your passing away, they may actually let you use $200,000 or $250,000 of that early if the event of long-term care came up. So if you have existing insurance, that's plan number 1. Go check and see, does it really already have some provision for long-term care? I will throw out, though, there are different types of life insurance. And so if you have what is called term or temporary life insurance, it probably does not have long-term care provisions. But if you have universal life, whole life, the type of insurance that builds up cash, it may actually, in fact, already have some long-term care built into it. A third way of planning for long-term care is also to look at things from the income perspective. Now, most people are familiar with a pension, or at least how it works. There are some investments, however, that will also give you a guarantee of lifetime income. And some companies offer that guarantee with an extra benefit that says, should you or a spouse need long-term care during your retirement years, they will simply increase what they're paying you. Some companies, it's double. Other companies, it may be 150%, but think of it simply as if part of your investments was paying you another $2,000 or $3,000 per month for retirement income, and then the need for long-term care came up, that $3,000 may go up to $4,500 or all the way up to $6,000. So in and of itself, that extra $2,000 or $3,000 may not pay for long-term care, but it certainly goes a long way towards having some extra money come into the bank account versus not having anything at all. The last way of planning for long-term care, say, maybe isn't so much as actually a plan, but understanding what your overall retirement picture looks like. For some people, if you really look at your plan for retirement, look at income versus assets and expenses, and if things simply continued to grow, you had saved enough and done a good enough job in being prepared that in your 80s, you were going to still have several $1,000,000 left. Let's adjust for inflation. And even if you had to spend $1 million+ on long-term care in your mid-80s, that you, your spouse, the rest of your family was still going to be just fine. Then you may have put yourself in the fortunate position you can simply do what's called self-insure. You've looked at the numbers, you've made some educated decisions and saying, if we have to pay for long-term care, we simply pay for it. And you, your spouse, your loved ones are still going to be just fine financially. So the biggest thing as we look at today's video is understanding there are multiple ways to provide some long-term care protection. The most important thing I can leave you with today is understanding which of those may be most appropriate to you. And that definitely depends on your overall retirement picture, your sources of income, and even what your tax picture may look like. So if you want more details on that kind of planning, make sure to subscribe to the channel, or if you have particular questions on what may be appropriate for you, simply reach out to us at info@outlookwealth.com.